Hey there, it's Collin, Fett, your agent, here to tell you all about the purchase agreement, everything you need to know about the purchase agreement. So if you're watching this, you're probably in a position where you're going to be buying fairly soon, and it's important you know what you're going to be signing. So a lot of times we do this digitally, and we go through what you're going to offer, when you're going to close, all these different items. We just go through that verbally or via email, and then I fill out this purchase agreement, 6-page legal document that you're signing your life away. So it's important to know what you're actually signing, what are contingencies in it, what do contingencies mean, and what are some ramifications in the purchase agreement. So I'm going to try to make this fairly brief. I'll have other videos going more in detail, or we can just discuss specifically over the phone. So like I said, it's a 6-page document. I've got it actually on the screen here in the dotloop software. So when it comes time to sign a purchase agreement, we'll send it over to you through, it'll look kind of like this, but it'll be filled out with your name, information, whatever. And then there'll be signature spots, initial spots at the bottom, and then a signature spot at the bottom of the 6 pages where you can click and sign. So anyway, kind of going through it quick. First part is just general information, the property, the seller's, your name, legal address. This is like what the lender is going to use to make sure that they've got the right property. We're going to make an offer price, and we're also going to make an offer date, a date and time, and an expiration date. So usually, not always, we'll give them till the end of the next day, 5 o'clock the next day. But if it's a hot property and you're offering a really good price, maybe we give them less time to make a decision, or maybe it's in an estate and there's 2 kids that are deciding, one's in California, one's in New York, and we got to give them a week to decide because they have to connect and whatever. And then we've got so obviously purchase price, and we've got terms of the loan or terms of the purchase. So in some cases, buyers pay in cash, so then it's not contingent on financing. A lot of times it's you're getting a loan, so most people are getting a loan, conventional loan, FHA loan, USDA loan. So it'd be contingent upon the loan, which we'll get into in a second. Sometimes it's going to be subject to sale. So subject to sale, meaning that you've got a property to sell and it is not pending yet. You do not have an accepted offer on it yet. Or subject to close, meaning that you have a property to sell, but you've got a buyer that's lined up and they want to close next month on this date. And that's where this would come in. Earnest money. I'm going to skip over the stuff that we don't see a lot, like I said, because there's more detail in this, but I'm going to kind of go over the key points that are common. Earnest money. So usually earnest money is about 1% of the purchase price. So a $200,000 house, put $2,000 down, $100,000 or $1,000 down. Usually we do this within 3 business days, and usually we have an EFT where we send you a link and then you can pay online. We can also accept a check, and this is held in a trust account with a brokerage. So it's not like the seller gets it, and this is basically kind of like a deposit on a rental, where it's just make sure everybody plays fair, and then that goes towards your down payment when you go to close. So it's not like you're giving that money away. It's earnest saying that, yep, we're serious about buying this property, and we're putting some money down, putting our money where our mouth is. Next is the contingency. So there's 2 main contingencies you'll find in this purchase agreement: the financing contingency and the inspection contingency. The contingency is basically saying if things don't go this way, we're able to withdraw from the purchase without legal ramifications, get our earnest money back, and both of us go our separate ways. So one contingency is the financing. So like I said, we check, yes, it's financing. We're going to determine the type of loan that you're getting. We're going to let them know whether you're getting a 15 or a 30-year loan, how much money you're putting down. This is a key point, especially when we're in a multiple offer situation. If you're getting a conventional loan versus, let's say one guy is getting a conventional loan putting 50% down or 20% down, the other guy is getting a USDA or a VA loan putting 0% down, the seller's going to look at both of those, and if they're the same price, they're going to say, well, this guy's a stronger buyer because he's putting 20 or 50% down. So it's important that we add that in there to say kind of the strength of the buyer. Next is seller paid closing costs. So as a buyer, you'll probably talk this over with your lender, but you've got closing costs for origination fees, prepaid insurance, prepaid taxes, all those clumped together as closing costs. So what we can do is raise the price and have the seller pay for those, and basically wraps it into the purchase. So you can finance your $4,000 or $5,000 for the closing costs at a 2.5%, 3% interest rate, over 30 years or 15 years. We check that the property must appraise. So you have an appraiser go out. The bank sends them out to make sure that the property is valued at or above the purchase price. So if it comes in less, another video for that. Preliminary approval. So that's why we're harping on you always get the pre-approval letter. This is saying that, yes, I'm pre-approved by this bank for this amount, and just basically proves to the seller that you are actually the real deal. We have final loan approval date. So we fill this in. Usually we go a couple weeks before closing. This is when the lender pulls final employment, make sure that you got the funds, double checks everything is good. And so we'll get a final loan approval saying that there's no more financing contingency. You're good to go with the loan. Next is the closing date. So the closing date, that's the day that you get the keys, you switch over utilities. It's your baby. If the furnace goes out the next day, that's your problem. The closing date, it has to be a weekday, because that's when lenders work, when the courthouse is open. So Monday through Friday, and we determine it now, and sometimes it can move around. Kind of skipping over some of these items. Next is important one is included property. So this would be like your oven, your stove, your microwave, your washer, dryer. So we want to include those, but then we can also exclude things. Let's say there's a play set in the backyard that you don't want to deal with. You don't have kids. So we want them to make sure that they get rid of it, take it out of here, sell it, whatever. Or maybe you want to include it. So this is where we determine that. Next is the inspection contingency. I've got a whole video going more in detail on this, but this is the second big contingency, meaning that if it doesn't go the way that we expected it, we can withdraw, get our earnest money back, and move on. So the inspection contingency says that we're checking for major deficiencies that affect the fair market value of the property, So I always say $500 to $1,000 kind of affects the fair market value of the property. The inspector is going to find all kinds of little things, but we're looking for the major things. And so from there, we can renegotiate. If there is something major, renegotiate, just back out and say, hey, this is way bigger project than we thought, or just move forward, remove that contingency, and go on. So it's usually we do 10 business days, but depending, sometimes we'll shorten that up to make it a more enticing offer. Next, the pest inspection is done by the seller. If there's rental properties, we determine how much time. Sometimes we get a home warranty. So this is where we say which plan, who's paying for it, all that good stuff. Then we determine who's the brokerage. So if buyer, seller are the same. And then the final page is to sign. So that's a quick overview of the purchase agreement, kind of those key points that you need to know. Obviously, it wouldn't be a bad idea to read through it, ask questions. It's actually written pretty not so legalese, so a normal person can actually read it and understand what it's actually saying. So hope you found this valuable. Excited for you if you're watching this and you're getting ready to make an offer. That's very exciting, and we'll talk to you very soon.